Hey, this is Jeff Scott. Welcome to this week's top-down review. I entitled today Melt Up Part 2. It's January 14, 2018. This is my top-down review. Markets are not open until Tuesday. Futures are strong at this point. Let's see if I can get this. There we go. As always, this is for educational purposes only. I'm a doctor, not a broker. I'm not licensed to tell you what to buy and sell. I'm independent. I pay for the tools that I use, and trading involves risk. You and your alone are solely responsible for investment decisions you make, and anything that I call out as potential trading opportunities should be considered for education purposes and not investment advice. When I do my live education, I entitle it to Be Your Own Guru. My belief, as taught to me by Ian, is that each of us are responsible for our own trading, and we should all figure out what works to us, build a trading style program that fits our style and what our needs are, and just get good at it. To me, learn from a lot of people, get a lot of exposure, learn what works for you, and then create. So what I do isn't pure anything. It's a little bit of Cancelim, as I learned from O'Neill, a lot of what I learned from Ian up here, and Ron Brown. John Person taught me how to really trade, Van Tharp Money Management, and my buddy George Lee. I basically take it all, mix it up, put it in a blender, and spit out what I am. And it's be your own guru. Don't rely upon others. I have a lot of technology. I need TradeStation and Thinkorswim. They do different things for me. They're both good products. Genesis is great for futures, not necessary for most people. HGSI is my favorite aftermarket analytic tool, along with EdgeRater. Seasonality programs I follow. I'm hoping today I'll actually remember to look at Netflix, and then a number of websites. Here, speaking of websites, here's the highgrowstock.com website. I have nothing to do with this. It may not be the current website picture, but I want you to see two things. Free 30-day trial. If you like what I do and want to learn more, download it, email me, and I'll send you some videos to get you started. And then under investing strategies are a number of videos that I've done like this one today on weekly reviews. Stocks are cyclical. Indexes are cyclical. Industry groups. And how many times have I said in the last 2 years that it looks like we're rolling over and we have another leg up? One more time. Frankly, it's felt like we just started again. I have historically made an argument that this is not a bull since March of 9, that this is a much more newer bull. I probably won't go into that argument today. I don't think the bull has to be over now. But, we've had an amazing run this year so far, to the point, and I'll show you my portfolio. I'm up 27% and over $700,000 in 2 weeks. That's not normal. I'm good. I'm not that good. And when you move like that, you're getting into a climax run. Problem is, I don't know when that's going to stop, and I hate to get off this road. So, since I thought we were starting a new leg up, or acting like a new leg up, I went very long, buying stocks, buying calls, selling puts. Maybe sell a few bull put spreads, put some money in my pocket. Sometimes I sell a bull put spread against a call to help pay for the call. I don't normally do cover calls in a raging bull market, but I have sold a couple of calls against some of my big positions. I mean, a way out of the money Amazon call still can net you $20 or $30. At some point, the market's going to stop going up, and it's hard to be out the day before the market stops going up. So I start to take profits, buy a little protection, put some in the bank. Go buy yourself a present, like I bought myself a new computer. If you look at how the market ended on Friday, if you look at the sector ETFs, utilities were red. The other weak sector has been staples. But as you look across the board here, the staples here have some red, as do utilities. Home builders with the rates going up showed some weakness. Other than that, this market is just rip-roaring strong. If we look at the major indexes, let's just pull up my TradeStation charts, especially with all the little indicators I have up there. I think it's much easier to do it this way for you. So let's just very quickly go through. These should be the daily charts. You notice for each of the indexes, you're going to see the bubbles on the last day. We closed at all-time highs on the E-minis. Yeah, it looks like we have increased our rate of ascent. Certainly looks a lot different than this. But, you know, I don't know when it's going to stop. And I guess this here is actually today. So this day here, that's why the volume looks so low. But you can see the futures are up here 5.5 points on the E-minis. But if we just go back a day, you can see the strength in the market. If I look at the NQs, similar picture, up 13 points right now. If I look at the YMs, up 93 points, closing at a high. And even the Russell futures, which had been the slowest, really had a big move up on Thursday and Friday and led the market higher into the end of the week. Maybe that's the January effect coming in. And those futures are up 60 or 0.66, 0.5%. So futures look strong. The markets have been strong. What's not strong, the VIX remains low, not as low as it goes, but pretty darn low. Just fails at this 200 time and time again. And if I look at the dollar, and we'll look at the dollar on the weekly chart where it's even more impressive, you can see the dollar really sold off last week. Now let's put this back and take a look at weekly charts. That's monthly. Look at those too, but I want to look at the weeklies. Here we go. And let's just open this up and very quickly, all-time highs, again, rate of ascent increasing on the E-minis, NQ weeklies, YM weeklies, the IWM weekly, and then you can see the VIX weekly is just down in the muck, and then the dollar falling off on the weekly chart. Interesting markets. Clearly, you want to be in this market. But it's getting to a point where you got to be a little bit scared if you're not in already. But more to follow. All right, so let me do this. Sorry about that. I knew that was going to happen. All right. And then sometimes I like to just put up my Genesis charts and put daily on the oh, stop that, Jeffrey. Daily on the top, then weekly, then monthly. And I got the E-minis, NQs, TFs, NYSE, and the Ys. Everything's in bull. Everything's in a buy. Everything is strong. It's almost too strong, frankly. Rates went up this week, and you could see on the 10-year breaking above this line in the sand. I like the rates in between here. I found that when the rates are between these two lines, the market does okay. When the rates go up too far, the market's probably going to sell off. Sweet spot, and that's good for banks and insurers, bad for home builders and REITs, and we saw that in utilities on our chart review. On the 30-year moved up, although a little bit less dramatic than on the 10-year. AD lines on both the Russell 2000 stocks, the Russell 1000 are reaching for the sky. And if you look at the AD line in the NY in white, and then a bunch of the major market ETFs, everything is hitting new highs, except for bonds, which is what you'd expect. Now, what surprised me is I looked above the 200 and above the 40, and frankly, I could have just presented last week's slides. So even though the market went up a lot, it remained stable. So it's not that much more oversold, overbought rather, than it was a week ago. And even the 3-month new high, new low actually was steady this week. And you can see the last week in green this week showed it didn't change much. That's important because when this gets up towards that line, we always pull back. And so we still have some room. So even though this market's even though it should be getting more and more overbought, I'm not seeing that we're at an extreme. The daily and weekly McClellan, I'll just call a spade a spade. They're not making new highs on the submission index or on the oscillator, but they're all consistent with where we're going, and I don't see big divergences, so we'll wait. Now, I like to look at Edge Rater. Now, I made a mistake here, and I only looked at the 2,700 stocks in the universe I would look at, which means price above, I think it's 250, above 200 and 150,000 shares. But you can see the average stock here was up nearly 5%. Now, the number of stocks in the various ERG, earnings per share plus relative strength plus group rank. And as I always like to say, I throw out the tail and the head, getting very few stocks. So let's start when we get above 35, 40, which would be from here to here. And you can see that high ERG favored over the first month. Looking down here, EPS rank, clearly the higher the EPS, the better return. Relative strength still worked well for stocks with very poor, so jump. And then group rank, again, junk off the bottom seemed to be doing well. So, but overall, every ERG group you could have looked positive. There was one group of 11 stocks that had a huge move, and that probably explains the relative strength piece. Current buckets, so we look on percentage of stocks in the S&P 1500. The 1-1 is when I basically made my list. I try to update it quarterly because the lists become out of date. But you could see of the S&P 100 or 1505, whatever we have in our list, 76% are above the midline of their Bollinger Bands. That is bullish, but it's not. Although we got about 22% of stocks above the upper band. Now, I've found over the last years that is another sign of a extended market, but like when you have a lot of stocks underneath, doesn't always revert very quickly. Could just slow down or go sideways. One would expect no HINDYs. I guess I'll just have to tell you is 12.25% of the NASDAQ were at a new high on Friday, and 12.5% of the NYSE. The top 50 day going back 20 years. So if you look at 20 times 250, so days in a year, so that would be about 5,000. That's the top 1%. So all signs of a market that's run quite a bit. From a market tone, boy, for the first time in ages, bullish period, we look at this Woody indicator, which is down here where all the major indexes are green. You'll notice that I had Chris White substitute the idea for the Russell 2000, which is no longer captured in HGSI for whatever reason. And then on sectors, the only weakness was stabilities. Canaries in the coal mine. As people know, I've followed this list of popular glamour stocks, I guess you could call them, leaders, and they broke out to a new high. That is a big deal. Not only did they break out to a new high with a pocket pivot and increased volume, finally, the weekly bongo, which is my accurate buy-sell signal, went green. So that's actually bullish. And if I look at the Scott Index, which I put together in June of leaders at that time, boy, those stocks breaking out to a new high as well, and also the index going green again. So on the bongo weekly. So lots of strength wherever you look. Gigantic news week this week. Again, Monday is closed for Martin Luther King. And as you saw, the future strong. Also, oil's up a tad, as is gold, and dollar just continues to show some weakness. Again, not a big news. If you look over on the right side, earnings, got United Healthcare. You've got CSX. We'll see what happens with the death of their CEO, impact the call. Bank of America, that's a big one for me, and Goldman Sachs. Alcoa, which used to be the leader, Morgan Stanley, some truckers, some regional banks, IBM, they haven't had a good quarter since I can remember, Schlumberger, regional finance, So a lot of big earnings. So it may be what kills this rally, or what takes it to the next leg up may actually turn out to be earnings. And as I've said, this is my quote: to hold stocks over earnings dates, it's bad judgment to not know when your stock's earnings date is scheduled. So thoughts: market certainly is melting up, stocks up, color down, volatility down. I think this is being flogged by tax breaks on corporate America and a weak dollar, in the setting of continued low inflation, low interest rates, and a synchronized worldwide growth. Despite this, there is a wall of worry, which markets like to climb. The continued ridiculousness of Trump. A lot of people say the same thing. Those that are conservative, obviously, they like the things that he's accomplished. They just wish he'd stop tweeting. You've got Korea rating. So there are things out there. As I said, I've seen a 27% rise in my portfolio in 2 weeks. This is not sustainable, nor is it within expected reason. And when I see something like that, I start to take profits off the table. I'm still heavy in the market. I'm still margined, to be honest. And I start to write calls against some of my positions. And I'll write out of the money calls, collect a little premium, which could buffet a short-term pullback, but also which gives me a little bit of and then market momentum can persist long beyond what we expect, or what I expect. Now we'll see if a positive earnings season is enough to propel to more new highs. Top-down agenda, now on to the charts. We had a great live session. We did 4 webinars before, 4 webinars after. I've had lots of positive. Thank everybody for that feedback. My plan is to do it again, and I'll let folks know when I do it, probably be in the back half of the year. This is the group performance analysis that I run in HGSI from Friday to Friday. It looks at a number of different. The first thing I look at is black versus red, and boy, there's very few groups moving to the downside. 3 of the groups that move to the downside are groups that you expected to move to the downside. Then I look at where is the S&P 500. It's up 1%. Wow, what a super strong week. Now I want to know how my buys, my non-filtered buy list compared to that, about the same. And then when I fill that, 0.75%. So I don't like underperforming the S&P. Most importantly, I like to see how my stocks did. Last week they were up big, and this week they were up 3.33%. 9 losses. What's interesting is some of the stocks that I thought were potential shorting candidates actually were up 7.46%. They reverted to the mean. These are all stocks that had a bad prior week. And I guess the message here is, and I didn't short any of them, by the way. I wouldn't short this market, but I look for the market rolls over. Is you don't go against the tape, and this is a super strong tape. Now I threw out some pretty crazy performance numbers, so let me put my money where my mouth is. Really big portfolio. I do have a loser on SVXY. I took and it bought me a lot of insurance against about a $20,000 loss potential. And right now it's under, and I'm okay with it. I'm losing on that is because I'm making money on my stocks. And there you could see that I'm not making it up. This has been a crazy, and if you take that number and remove it balance, you get to about 2,500, and that's about 27% of a return. So I'm not making that up. See, it's crazy. That's all I can say. Some of the stocks that I talked to you about, we talked about Cargill Group a couple of weeks ago. I've had a turn there. We talked about EC. I actually sold the short. What I did is I sold a bull put call. I'm still in the call, which has done extremely well, and I actually made money on the other side as well. We'll talk more about some of my trades in a few minutes. I do like to go into TradeStation. I don't know if others have had issues with TradeStation this week, but a lot of my indicators were not working anymore, except on this. Hence, I'm trying out my new machine, and if I can use this for my weekly reports, it's going to make my life easier. And reduce the clutter on my desk, which will make her happy. So I like to start here. Let's look at some futures. Let's look at the E-mini. We know the futures are doing well. I look at 6 points. Point number 1, arrow or down. It's in a green arrow buy, daily, bi-weekly, bi-monthly. No shocker. The second thing I look at is what is the car? Green is, this is the Elder Impulse Indicator. Green means, according to Alexander Elder, the buy window's open, I can buy or hold, I shouldn't be selling. R means the selling window's open, I could be shorting or holding, I shouldn't be going long. And blue, I can do whatever I want. They're green all over. Then I look for, and these red dots show up if there's suggestion of MACD divergence. And they're just a sign of us being at risk, but they can go on forever. So I don't spend a lot about them, but I do notice them. They've come off the daily, but they're still on the weekly. I look at where am I in my outer envelope. I don't continue outside the envelope forever. So I do expect at some point to go sideways or revert to the mean. I look at my high jump. It can't get any higher. We're at 100. That means we are as extended as we've been over the last year. And my weekly bongo and all my other bongos are green. Amazingly strong. At some point, it's going to take a break. I just don't know when. But with that high jump, committing capital that's not in the market already, you've got to be a bit cautious. But that doesn't mean to sell everything, and I didn't say that I sold everything. If I look at the Dow futures, the YM, again, those red dots above the envelope at 100% and bongo green. Same thing as I said about the E-minis. The NASDAQ futures, broken, strong as can be, 100%. And then if I look at the Russell futures, not quite at 100%. By every measurement is extended and overbought. But as I said in the beginning, these overbought markets can get a lot more overbought. They don't, because I say they should. If you look at the dollar, we know it's weak, and you can notice a couple things. In all 3 time frames, it's weak. It's got red paint bars. Interestingly, it's are occurring, and that could be something to watch to see if you get a rebound. And the weekly bond goes red. The VIX, there it is. I knew it was supposed to be up there. You know, it's interestingly, it's green with a buy signal, weekly sell, monthly sell. It's kind of, and then if I look at gold, gold's had a move up. Actually, it's been moving up for about a month right now. I actually believe it and take a position in gold, which I have now. So markets are strong. Gee, nothing new there. Now, if I open up HGSI and I go down brown groups, click on Major Markets Plus, hit the warehouse view, it's going to pop up here. And I like to look at my top-down view, which is the T1 view, which is I am in heavily weights the last day. Make sure I'm capturing. There we go. Make sure I'm ranking by raw combo. And what do I see? Industrials are leading, NYSE, mid caps, NASDAQ, small caps. The Russell 2000 here, I should just take that out because it's not been updated in ages and it caused problems. I hate to take it out and then have it come back in and I miss it, but all right, I took it out. All right. Russell is here, and actually the S&P 500, the S&P 100, the NASDAQ 100, the bigger stocks were all up. They just lagged the small stocks last week. I like to look for indexes. Yes, I've already done that, but let's just look for completeness sake. I'm trying to go fast today, and let's just drop it down to one of my cleaner views. And what do I see? We're getting further away from the moving averages. The high jump is at the high. Weekly bongos are green. What a beautiful uptrend, but at some time we're coming back. Sometime I expect us to pull back. I don't know when, and I'm not telling you that it's tomorrow. Dow Jones Industrials looks the same. NASDAQ Composite, the same. And again, we have a tendency to return to the 17 and to the 50-day moving average. The high jumps as high as it gets. At some point, we're going to return. Actually had returned. And there you go. This one's up to date because it's the IWM. And I do expect a pullback to the 50 at some point, and as well. Beautiful markets to be long. It's all, I mean, crazy. Probably been a decade since I've seen markets like this. A couple of things here just to point them out. The dollar in free fall. It had a kahuna to the downside showing momentum picking up. The bongos are red, is near the bottom. At some point, the dollar is going to bounce. I don't know when that's going to be. We know the VIX is low. We talked about that before. It struggles with the day moving average. The commodity index is something you might expect to start perking up with a weak dollar, and you see that there. And the commodities that we talked, gold. Gold broke out. As I said, I went long gold. Now, remember when I look at a lot more data, gold has come from a long ways down, and it's failed here many times. So I'm in gold, and we'll see what it does. I'm not sure I'm married to it, but I'm in it. Silver, breaking above the 200. Might be a good buy point. Looking at miners, breaking out there. That looks good. And oil has been super strong, $60. Broke out of a trading range and continues to go up higher. So, super strong markets. What can one say? Industry groups at Warehouse View. I've got 174 groups, and let's look at two-day force. 73 to the upside. 74 to the downside. That's up. Never mind. And only 8 groups to the downside. Very quickly, what's to the downside? Internet-based services. That's interesting. I didn't feel that. So here's one stock, a lot. So these are not any of the major internet stocks that we might look at. Electrical power, healthcare services, wealth managers, dividend payers, and real estate. Real estate was weak. And then cement. Let's take a look at some of the top groups from a top-down perspective. So we'll go to the, all right. So exploration, biotech, semis, airlines. Now, I know why I'm making money. Oil, gas services, banks, specialty pharma. So let's look at some of these. Right-click, change to index group. Take a quick look. I own Devon and a couple others. Here's APC. Let's take it down to my standard view. Oh, stop that. So weekly bongo's been green for some time. It's broken out. You can see the group strength. Here a bunch of pocket pivots. APC, that's one of the bigger stocks. Kind of coming out to new highs, pays a 1.8% dividend. Look at this earnings per share growth. Devon, I own Devon. It looks like the same chart as Conoco pattern-wise. Out to recent highs here. Everything is green. Great earnings per share growth. Teeny-weeny dividend. Just broke out above the 200. Great earnings per share growth. This one's less extended. This one might be attractive. And just going down the list a little bit more here. This is an expensive one. They all got the same chart. Occidental, Marathon. I've been saying for weeks you need to own some of these. I have had Devon, Abbott, which is sort of going sideways but going up. So it's going in a slow uptrend. Some people asked me about the scaled two-day force, and all I wanted to do is take out the volume as a big driver and look at today's volume to an average volume to give me sort of a relative strength of the volume times change in price instead of actual volume. So stocks that are not volume stocks but had a big volume increase will come to the top. So we have a couple here that are different. CNOOC, a royalty trust. Let's just see if there's anything there to look at. Same exact pattern, 3% dividend on CNOOC, but a very expensive stock. Almost no average volume of 100,000 shares. That would be a problem for me. And then BP Prudhoe, averaged 189, did sixth pattern, but I don't like the shares. I do like a 10.3% interest. So it might be something that, for somebody, that might be worthwhile taking a look at. All right, so still that's a work in progress. Biotech. Because my job works with a lot of these companies, I don't buy a lot of individual biotechs. Acting about, obviously, some news came in, but one of the patterns that I look for are stocks that start to have huge volume. Here's an average 533, and on Friday it was up on 3.7 million shares. Something happened, so I might want to look at information from the web and see what it says. That's just about a study, so not necessarily big moves. They're launching a study. But there's one, Celgene. I do own a position. I think it's a value play, and there aren't a whole lot of value plays in this market right now. Obviously, it's only a value play because it got hammered. I like it long term. Amgen, up here, mobile breakout and a pocket pivot. Sarepta, this is a stock that has a drug for muscular dystrophy and a run from 40 to 60 in the last 5 months. Doesn't make any money. In some ways has been a disappointment in the marketplace, but continue. I think it's probably a takeout candidate. This one's of interest to me. It's a little tiddler, doesn't make any money, but it had 7 million shares on Friday, up in the setting of a typical volume of 1.4. That gets my attention. It's a cheap stock. It was higher in the past, and so what caused it to skyrocket? Okay, so Amgen's playing with one of the drugs. All right, well, that's an interesting reason. And what else? Agios, they've got a partnership with Celgene, and this is the spinoff from Baxter. The way that I play biotech is to avoid conflicts of interest with customers, is I buy LABU when I think they're going higher, BD when I think they're going lower. Obviously, they've been going higher, and LABD is pretty weak. I'm sure there's a split coming here, or a reverse split. So biotech is strong right now. Semiconductor devices. Boy, these are HGSI stocks up the wazoo. And a couple of these actually looked good to me. Marvel Tech has been a great stock this year. Pullback looks like it's about to break out. Cup handle breakout. Mobile breakout, pocket pivot. It makes money, small dividend. So Marvell looked interesting. Texas Instruments, boy, wouldn't you like to have found it here? So what would you have noticed here? Pocket pivots, mobile breakouts from a squeeze, weekly bongo is green. You had a Kahuna pocket pivot, mobile breakout from a squeeze. This is when the stock started looking interesting at a PSAR reversal back here as well. Cuervo, kind of a sideways pattern, looks interesting here, but I don't like the sidewaysness to it. On semiconductor, nice pattern, pullback, looks like it makes money. I might be looking deeper at this one as well. Airlines, I've got a nice position in Delta, which was a good thing this week, but American or Continental. Delta up on earnings, a Bible gap up on Thursday or Friday. I guess, I can't tell it was Thursday or Friday. I guess that was Thursday. Mobile breakout from a skip pivot. Great earnings per share growth coming back. A lot of positive things being said about the airlines and that they're no longer money pits. Airlines also looks good here. Similar pattern, isn't it? Its earnings come out in a couple of weeks. United Continental. Reason why I like the same pattern in Delta. The earnings are done. Their next earnings are not to tax time. So Delta looks good. Now in the airlines, I kind of liked to know more here. Latin, inexpensive airline stock, great earnings per share growth. A Latin American airline, obviously, based upon the name. Application software. It's hard to limit the number of stocks. There's so many, but what limits them is so many of them are gone too far. Adobe, a $200 stock almost, good earnings per share growth. But what I don't like to see is that we're seeing pretty much earnings per share on a lot of these stocks below the PE multiple. Now, some people say you can get a multiple twice the earnings per share rate, which means this goes higher. I think it looks expensive. I love the pattern, nice uptrend. Activision Blizzard broke out. It's been in a range for some time, and I can just extend this now and say that it broke out, and that was what I was waiting for. So very interesting here. Not a cheap stock. Activision, earnings not for almost another month, breaking out of its box. Breakouts have been working. Autodesk looks like it's getting ready to run. Salesforce is a leader. And then another one that I own is Paycom, which broke out this week at an all-time high. And if you look at what happened here, it had a kahuna, pocket pivot, and the weekly bongo went green. So, of good-looking stocks, not a lot of stocks that are at good buy points. And that would talk a lot about what I did this weekend. Look at some of the resource stocks. Gold, like LABU, is turning up. Pocket pivot, kahuna, mobile breakout, bongo's green. Very much, I think, dependent upon the dollar. Mining, a beautiful stock, breaking out to new highs, $40 stock. Let's go on a weekly view, see where it's been in the past. It's probably not new highs. You look at the week, impressive, breaking out perhaps of a trading range that it's been in for a year and 4 months. So mining stocks are starting to look interesting. If the dollar continues to weaken and commodities, maybe the gold bear is over. Goldcorp broke above its moving averages. Tech Resources, which I consider as much in zinc as anything else. This is one that I've been trading, or should I say this is one I've been sitting on my hands about for the last couple of months, breaking out to new highs. And I got to take profits. But you look at the earnings per share growth and multiples, and then you look at the PE, maybe this thing can go a lot higher. I was tempted to put a weekly chart on and say, oh yeah, this stock, that's a 200-day, better go to monthly. There's a stock that after the market up to $60, so maybe it has a chance to go higher. We shall see. I'm in the tech still at this point. Silver stock and precious metal. So the metals look. Oil and gas services, Schlumberger and Halliburton are the big guys. Schlumberger, what a nice breakout above the 200 here. Beautiful move. Beautiful uptrend. Of course, I bought the other guy. I bought Halliburton, and I can't complain because Halliburton's done the exact same thing. These are the big kahunas. Look at the earnings per share growth coming into Halliburton. Looking at some of the other stocks that made the list, Neighbors Industry, is it getting ready to break out and start a run? That's bothersome, pays a dividend. FTI, I was in this, got stopped out. I wish I was still in it. It's had a nice move like Halliburton and Schlumberger. Baker Hughes, GE, further down, but good earnings coming in. 5.8% dividend. As long as oil stays where it's at, you got to believe those stocks are going to do. Internet media, all kinds of rumors about Twitter either going private or being bought, and Twitter broke out on Friday. Nice uptrend, breakout, kahunas, pocket pivots, mobile breakouts. I'm not a Twitter person. I don't get it, but the stock looks interesting. Google, things doing well. breaking out to new highs. YY looks a lot like the same chart as Google, breaking out to new highs. Don't know share growth. I don't trust zeros. I look them up and see. Not a cheap stock. And Baidu, sort of a laggard here. When's Baidu going to make its run? Yelp, another laggard. Is it ready to run? Pull back to the 50. Pocket pivots, kahunas, mobile breakout of a Sango. I think Yelp looks interesting here. And then one that I've been lucky enough to be in for a while, Weibo, looks like it's potentially getting ready to go again. But I wouldn't mix above that prior high there at 123. But look at the earnings per share growth in this stock. Yes, it's multiple Chinese internet play. Banks, bank regionals, and the big ones have all benefited from rising interest rates. SunTrust, PNC, these things are all getting away from you and probably too late. Months ago I said I'm starting to accumulate KRE, which is an ETF for regional banks. It looks just like the banks. If the rates go up, these things aren't stopping. They're not cheap. They're big benefits of the tax breaks. We show specialty pharma, kind of like biotech. I know a couple of these. I own a couple of them, so let's see what we find. Nectar, I actually this stock, and I quickly covered. I don't think it's deserving of its multiple. I understand what's going on and why people are all excited. I believe this big number here is a licensing deal and not the beginning of something new. They have a very old immune therapy that they put into a new format. And so now they're a new immuno-oncology company, and that drives stock prices crazy. One that I'm going to continue to follow and look to short it when the market rolls over, but right now I want to get in front of a freight train. Global Therapeutics, they've got some neat gene therapies for things like sickle cell anemia. I wish I would have bought this before it broke out. I listened to their presentation at JP Morgan. I think this story, but you got to wait for these things to pull back, or at least base for a while. I don't like this pattern of big run up and pull back. Not sustainable. One I own, Esperion, which is in a nice move. Slow, gradual uptrend. As I said, one way to play the biotech is LABD and U. That is how I look at a market like this, because there's so many great stocks. I want to look at stocks in the groups that are working very well. The diversified banks are down here for some reason, probably Wells Fargo. I don't know why. But I have a big position. I've talked about it before. I don't think it matters which one, whether you're Citi, Bank of America, JP Morgan, and probably long-term even Wells Fargo. They are getting extended. They are at their heights. They're going to pull back. But they will benefit from rising rates. They will benefit from the tax. Well, now, it is a good place to call out why I put in that new force scaled. This one came to the top of the list. Its average is 67 million shares, traded 66. So there's no volume story in that today. If I go to the scaled one, what comes to the top is JP Morgan. I haven't looked at this. Hopefully it doesn't make me look stupid. And it normally million shares, and it did 18 million. So perhaps this move is more impressive because it's on a volume that is 40% higher than notice. The pattern looks just like Bank of America, and here's Citigroup. Maybe you got one that looks like it's ready to break out compared to the others. I love this group, and I'm going to look at Citigroup this week. It's been basing for 4 months, and there's no reason why it shouldn't benefit like the others. So I like the bank. Now, I will tell you this week, was a tough week of looking through charts. And just for those who are new to me, here's what I basically do. I capture a lot of industry groups, or not industry groups, but stock lists. Here's some of the lists. Some of them are from people I've heard speak. Some are typical things out of IBD. Some are out of MarketSmith. So I have a bunch of lists that have been published. I also have a list that I like, some of the smart groups that are scans that are done for me every week. And then I've got some TradeStation scans that my favorite being the Trilogy Buy Group. We'll talk about a couple of these stocks in a few minutes. And so I put all the stocks I like into what I call my consolidated buy group. I get 1,200 stocks. So then I put some filters on them, and I got down to 729 stocks. And I looked at many of these today. S&P 1500, and now I got 2157. I put a price and volume, bring it down to 16. And then within TradeStation, I actually will scan those stocks on a daily basis. So for example, I don't usually run this scan anymore because I use a different scan, but I could go into there and go to settings, actually edit scan, and a list, which is called Consolidated Buys. If I go slowly, I might see it. Hold on a second. It's under Custom Symbol List. It's here somewhere. Here it is, Weekly Consolidated List, which is this list right here, and I will run my scans on that list on a nightly basis so I sort of use a lot of these programs together. These are the buys that I came up with for this week. Let me go through and talk about a couple of them. How many minutes? 47 minutes. And then hopefully I'll remember to look at seasonality in Netflix. Synaptics, this is the company that makes the trackpad mouse pads. Buying things that are low and moving up at this point of a rally laggards. So here's a stock that was a $90 stock. It's now down in the high 40s, low 50s. And why did this make my list? Because it broke above the 200 on a Bible gap up, had a mobile breakout from a squeeze and a couple of kahunas, and that I found interesting. Paycom we already talked about. Netflix, let's just do it now. I think that Netflix seasonality may have been built in, so I'm going to be may sell premium at earnings instead of buying premium. I took a position, or I've been having a position of now. I think I've got 145. I don't have a big position. I've got 140 calls, and it's now 221. Bad little number there. But Netflix, FLX, this is the season of Netflix. So for people that know seasonality, if you think about certain things occur every year, one of the things that might occur every year that we switch from summer to winter oil in the fall. That affects oil prices. There's a time that you plant that affects fertilizer about the same time every year. A lot of retail stocks go up every year in the first quarter because of sales. So certain stocks have seasonality. This program here is called Seasonality Trader. There are 4: Best Choice, Seasonality, and Magenta Trader. And to be fair, they all got some benefits to them, and they all got issues. Let me set things here. This will be the quarter ending 18th. So, what do you see here? You see on the left is you see the stock price of Netflix. What you see here is in yellow is the 10-year stock price pattern, and in green, the 5-year stock price pattern. And you could see that in a lot of years, and you can now look at 2017, and what I want you to look at is the white line follow up here. This is 2017. Netflix went up a lot. 2013 it went up a lot. 2011 it went up some. 2014 it went up a lot. 2009 it went up a lot. 10 it went up a ton. 2008 it went up, and I'm looking at this period in here in the white line. 2012 it was flat. 2000 actually went down, and 2015 it went up. This is a period of time where Netflix has a tendency of going up. Now, if you look and see, if you buy on January 16th and you sell on February 26th, that Netflix is up 9 out of 10 years. On the up years, it averages a 31% return, and on the down years, it was down 0.9. So based upon that, I and go very long Netflix into this quarter earnings. Down here, you sort of have each year piled up, how many were up versus down. This is the day after earnings has never gone down over the last 10 years. So here's the earnings that you could see for 5 and 10 year seasonality, a big move that occurs. So what should you be doing? Well, obviously you want to be long Netflix if you believe in the odds, and 9 out of 10 were the odds. Challenge is that the last couple of years actually come down into earnings, not up. So now let's just take a look at this way. Change my picture here to, so we have a nice channel, and Netflix is at the channel. So what would be optimal would be to see Netflix for the next couple of days pull back towards the bottom of the channel, because if it stays within its channel, you'd rather be buying it at the bottom. But this is super strong seasonality. You don't know what the price is going to be the day before earnings. The earnings come out after hours. I am long Netflix, and I will see where I am in this channel as we get to earnings day. If we're top of the channel, then I will probably sell some options that are 1 or 2 strike prices out against my position, because I'd be money. And if I get stopped out, I'm not going to cry too much. If we're at the bottom of the channel, I might be more aggressive. I also have a tendency to sell bull at this earnings, so I might sell a 120 put and buy a 105 put just to protect me in case I'm wrong and this year it goes down, but even the down a little bit. So I look at certain stocks for seasonality, and this is probably the poster child. Again, the product is called Seasonality. And let's see if I can bring the radar screen back up. Hold on a second. All right, so Netflix there, and let me bring up the rate, not the rate of the calendar. All right, they have a calendar format, and what I like to do is say, let's look at earnality, and let's look at, you had to win 90% of the time. I'm looking for a minimum of 10. I want at least 10 years worth of data. And what we're going to find out, these are the stocks that I'm going to be looking at. So this told me here, remember you buy Netflix on, what was it, January 16th, and this tells me on the 16th, Netflix, 31% up. So a lot of attention to seasonality, and Netflix is one. So Netflix, it's getting extended. I'd rather buy it closer in, not have a chance. I think the seasonality is well known. Northrop Grumman, a very expensive defense play, as are most. Why did I put it spacing? It looks like it wants to run again. It looks at a good buy point. Wynn Resorts, I have a position here already. It pulled back to the 50. Pivots Kahuna never changed its weekly bongo green. A mobile breakout, I think it goes higher. I might set a buy stop above the PSAR dot, and my stop would be somewhere under the 50-day moving average. There's probably a 5% risk you're going to take. To me, that's a very safe trade. I like Wynn. Dollar Tree, similar pathways, and now it's breaking out. Burlington Stores, ditto. Yelp, we looked at already. Arrowhead, we looked at already. Corvo, I'm going to watch. I love their growth compared to the PE. It just is a very sideways chart. Then again, you can make money in a Darvis box too, especially when there's 10, 12 bucks between top and bottom. This is a expanding retailer, growing. It's not cheap. Multiple is 49, but I think it's still early, and it'd be nice to buy it closer to the 50. Apple, you know, as much as people like to hate Apple, it just broke out the top of its trading range, and it's got growth coming into the stock. We talked about Devon Energy, talked about Marvell. Tenet is another one of these stocks that hit as the mobile breakout from squeeze. A pocket pivot, 2 kahunas in a row, great earnings per share growth. Looks like it wants to break above the 200-day moving average. This has been a big winner. I have a position in it. Century Aluminum, great earnings per share growth coming in. You know, it's already had a big run. I'll look at seasonality and things on that. Yeah, I love my dog, but all night long he cries for treats. But, you know, here, let's take a look at cons in more detail in a second. Let me just go through the rest of my list. Weibo we looked at. Cavium, I think Marvell's buying them. Looks like they want to break out higher here. Here's that airlines. Here's another stock, a beaten down stock. Its gap is at 11.5, so that's about 15% higher from here. A bunch of kahunas, a mobile breakout from a squeeze, increasing earnings, I guess, or less negative earnings coming in. 3.3% dividend. I've talked about this guy several times. A refiner pays a 21% dividend. Microchip technology, pullback. Is it ready to run? Look pretty good on my trade station charts. And then Sprouts Farmers Market, nice run up, sideways market. 2 kahunas in a row, mobile breakout from a squeeze. Bongo's green, makes money. And Las Vegas Sands, a lot like Wynn. And then here was a cheap gold stock. And I don't like it that much. And Altice. And then MyTech, I like this guy. Sideways move, sitting at a convergence of the moving averages. It's in a squeeze. A couple of mobile breakouts, 2 kahunas in a row. Now, let's look at this in con, and they both have something in common. So we'll do the first one. I'll work up in HGSI and I'll work up Con in TradeStation. Why I like this stock. I like this stock, pull back to support and breaking out. It's also hasn't broken out so far that the stop's going to kill me. So the high was 10.20. I'm writing it down on a piece of paper. I have a tendency to forget. So let's say I put a buy stop at 10.25. So it's got to move a quarter from the close. All right, that's easy. The sell stop would be, on my mind, would be the lowest bar in 4. So it would be this bar here, and that low was 880. Oh, that's not so good. That might not be so good. The 50 is at what? $8.90, $9. All right. The challenge with cheap stocks are, even though it looks good here, it's too far away. I would set my buy at 10.25, my stop. Maybe that's, all right, hold on, can't be right. High is 940, let's get this straight. My high is 940, okay, so I'll be setting my stop, closed at 940, at 945, now it makes more sense. My buy stop would be at 945. So if I was going to play this, I would set a buy stop above the high of the day, and then I would set my sell stop would be right, oh, I created a box. Nope, I don't want to do that, so I'm going to go back to this. So I stop right above the high of the day. I would put my sell stop here, being 65 cents on a $9.45 stock, so I'm risking about 7%. And if I can lose $1,000 on a trade, I can buy about 1,500 shares. So I like this stock. It's the kind of stock that it does not pay a dividend. All right, so my tech was one I liked, and another one I liked. I liked this whole list, and we're not picking necessarily the best. I guess there's a few more here. Let me look at them, and then we'll go look at Con. Sanchez Energy looks like it wants to go higher. Newfield Exploration. This is a biotech. I'm not sure I like it as much as I thought, but I wouldn't buy it unless it shows some momentum and moves up off of the pullback. That would show, and then Corson, that look, it wants to go higher. Look at the earnings per share coming into the stock. I thought that was interesting as well. All right, now let's take a look at Con and TradeStation. All right. So a couple things about Con. Con's in a definite uptrend. It's sitting right on weekly. It's right on daily resistance. Daily resistance here is at 37.15. So in my mind, if this trades above resistance, OBV's heading up on daily and weekly. It's coming out of a squeeze. So I might look at this and say, if I, open up my data window. All right, no. Here it is. So I would probably set a buy stop at about 37.35, which would take it above that trend line. I'd set my sell stop, let's look at on this white line here, additional change, which looks like it's at about, is that 34.13? That one's at 34.13. That would be, which would be the lowest of these bars. So my stop would be at 34.13. So I'm risking 350. So I'm risking about 10. But I wouldn't buy cons unless I took out my resistance here. And that's a resistance line as part of a package called Q that I own, where it paints support and resistance by itself. I bought it from a chap in Singapore. You can see it's got some resistance right here. But if it breaks out of this, I think it goes higher, and it's clearly in an uptrend. So I guess I'll go back and just make a few comments. I am still bullish. I think this market wants to go higher. Obviously, the futures suggest it. I am concerned that this market has run a long way and that the market's going to get more and more of a pullback. My hope is that we don't pull back 500 points on the first day. Obviously, that's a mistake. Futures are up. And that we have a chance to get out. I think it's not a bad idea if you are like me and have had a big run to start either buying insurance, spreading out your risk by selling some calls and putting some money in your pocket and taking profits off. If you end up selling half of your investments over the next week and the market goes higher, you're still going to make money. If the market drops, you'll be glad it's, and no one says you can't get back in. I showed you some of the stocks that I like. The quintessential pattern that I trade day in, day out, and what makes me the money that I show you is finding stocks that have been in an uptrend and then get into a squeeze, get